afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's another day of records for the markets. The Nifty trades above the 11,300 mark, and most of the sectoral indices today trade with gains. ICICI Bank is the top gainer on Nifty after its first quarter performance. Bank of Baroda gains the most in over 5 months after a strong first quarter. Management says FY19 will be a turnaround year. And HDFC, Tech Mahindra and Axis Bank are the three Nifty majors reporting their earnings today.
Well, the market's doing okay. I think banks are helping the markets do very well. So Nifty Bank is trading at the highest point of the day, and that is only aiding the sentiment on the benchmark indices. So we're looking the Nifty 2 right up there, but look at the Nifty Bank. That's the principal reason why the markets are doing what they are doing. So good moves on the Nifty Bank, led by ICICI Bank, SBI, and a few others. And as a result of that, we have these moves. Just bring up the mid caps and the small caps before we go to the heat map. And small cap index is up 0.5%. A market bet would be iffy, just about 1:1 or maybe around that. I doubt that the market bet is going to be dramatically better than what we otherwise see. No, actually it's 2:1 and it's only improved. So the small cap performance clearly showing at the broader end of the spectrum. Let's pull up the heat map and see what's moving and what's not. ICICI Bank and SBI right up there. Yeah, 4.5–4% apiece. Bharti Airtel has had an interesting day of trade today, from being down in the red to up about 4%. UltraTech Cement gains about 2.5%. Vedanta about a couple of percentage points higher. The big boy Reliance on the couple of percentage points as well. So when you have ICICI Bank and Reliance doing really well, they kind of mask the disappointment, if any, that comes in from stocks like Kotak and HDFC Bank and the IT space. So HDFC Bank is down about 1.5%. Entire IT space is down. Infosys, HCL Tech are down in the session today, and some bit of pullback for Eicher Motors too. Just very quickly, certain stocks that have reacted based on numbers or sentiment or otherwise just bring up 2 or 3 pockets of moves in the cash market. Then normally brings you up to speed with what's happening in the futures. But the result reactions that we've seen, BOB, Excel Crop Care, Coromandel, or BOB clearly the star at the broader end of the spectrum on the PSU banking lot, up about 9%. Gati, it's off the highs of the day, but still up about 8% after a 6% move yesterday on the acquisition talks, as reported in the Economic Times. Last but not the least, some result reactions or some pain points continue for these select names. So Rain Industries one, Symphony has really taken it on the chin the last few days. It's the 4th straight day of losses for Symphony, and Quest Corp down another 4.5%. So there's some pain points out here too. But Navneet, what about the more liquid universe?
Well, Neeraj, it's all about the banks, and even if you look at the major index, that's the Bank Nifty, we are seeing fresh long positions being created there. Remember, on Friday, the open interest in Bank Nifty was up about 13%, and today, once again, let's just pull up the futures. We've seen intraday long positions at least being created, so 14% higher, though the premium may have come off a bit, 6 points premium for the futures. But the Nifty futures are also trading with the premium in today's session, though it has come off what we saw on Friday's close, 4.5% higher in terms of open interest build-up. Let me quickly tell you what's happening with the options data right now. The out-of-the-money call strikes now 11,400 and the 11,500, which is sitting with maximum open interest, has seen some bit of open OI addition coming by. So 11,500 has added 3.5 lakh shares, and put writing continues for strikes like 11,200 and 11,300. Remember, the next level now to be watched out will be 11,500, as on the call side maximum open interest is there. A lot of stock futures in focus. I've just taken 4 right now. Bank of Baroda, fresh longs have been seen post the earnings. Remember, the NI growth was strong and loan growth of 10% was seen during the quarter. So good set of numbers. Volumes up really high on the cash side. Watch out for delivery data. Stride Shasan is the other one which is surged in today's session, and the stock has gone up really sharply. It's gone higher really sharply, 9% higher right now, 9% open interest build-up. Fresh long seen for this one as well. Godrej Consumer, no major price action has been seen, but the earnings came out a while back. Quarter-one margin expansion was definitely seen. I just want to highlight for the futures that there's been a significant increase despite of the stock price remaining flat for the day, 27% higher. So watch out for Godrej Consumer. And lastly, I want to highlight Ajanta Pharma, where open interest has risen quite significantly in today's trading session. The stock's up for the 4th straight day, 20% higher, fresh long position. Just an alert, the company comes out with its numbers tomorrow, so watch out for Ajanta Pharma.
Okay, and watch out for RITES. The stock has gained quite significantly, 36% in the last 4 trading days alone. They have now recently, just today, come out with the Q4 numbers on a standalone basis. The revenues were up about 31%, net profit up about 74%. Margins have expanded meaningfully. Yes, the PAT has been aided by other income, but operationally the numbers look very, very strong as well. So let's get in the management to talk about the quarter gone by and the outlook ahead. Mr. Rajeev Mehrotra, the CMD of the company, joins us right now on the show. Mr. Mehrotra, good having you. Thanks so much for joining in. Congratulations on a very strong quarter 4. Now I'm guessing even the first quarter numbers should be very, very close by to be released. Sum up for us. How was FY18 as the year, and how has by and large the quarter 1 been as well?
The FY18 has been a very satisfying performance. We recorded a highest turnover of 1,667 crores, which is up by 6.8% over previous year. We have been able to consolidate our margins, EBITDA margins at 34.3% and PAT margin at 21.8%. We had an excellent last quarter, March quarter. Our standalone income was up by about 35% in March quarter alone. And we received a very major export order. We reported this morning 567 crore rupees of export order of AC and non-AC coaches. We are already executing a major export order of 680 crore rupees, and that is scenario on the export side. On the consultancy, our consultancy key business actually has seen a growth of 22% in last year. So we are sitting on our very high order book of 5,515 crores, and looking at time horizon of 1 to 3 years, there is a lot of business in hand. We sign annual MOUs with government for 18-19 based on these order book numbers. We have committed a 22% growth over FY18 for 18-19. That is minimum for excellent rating category.
By the way,
the EPS, we have reported the EPS of 17 rupees 40 paise.
True. Yeah, and those numbers are looking
40 paise, which is up by 1 rupee.
Yeah, the numbers are looking strong. Yeah. Mr. Mehrotra, just before we talk about the business ahead, just one quick question, hygiene question out of the way. When do the first quarter FY19 numbers get released?
We are working on it. Since for us, the September would have the mandatory period starting, you can expect this in August. Mid of August, maybe third week of August.
Okay, third week of August is sometime when we can expect the first quarter numbers also to come by. Hi, Mr. Mehrotra, good afternoon and congratulations on good set of numbers.
Yes.
Take us through a couple of highlights from the segmental performance, the consultancy business which contributes the most. The EBIT, if one were to see on year-on-year basis, the contribution has gone up to almost 40%. Will this trend continue? Can we expect higher contribution from the consultancy side of the business in FY19?
Look, the overall order book had about 50% orders from consultancy side, and I see this position remaining between 50 to 60% of the revenue going forward because of the orders in hand.
50.
The consultancy business would remain between 50 to 60%.
Okay, and you also said your current
50 to 60% of the revenue.
50 to 60% of revenue. All right. You also mentioned your current book, order book is somewhere about 5,500 crore. That's the current order book. Is there any target that you have for FY19? Any new orders that you're looking to bid for?
It's a routine that we keep bidding for projects. So I would not like to comment on the pipeline projects. But yes, as I had said earlier, that looking at the investment scenario in the infrastructure sector, we are working on a couple of other orders also.
The turnkey construction...
working for a couple of other orders.
The turnkey business, Mr. Mehrotra, also has seen a dramatic uptick in at least the Q4 FY18 EBIT performance. What's led to this, and what's the outlook ahead on this business?
We had 1,400 crores of business in hand last year. So those projects are under execution now. So now the billing will start. It would be higher in 18-19 compared to 18.
And does it happen
18-19 numbers would be higher on turnkey projects.
Okay. And does it happen at these higher margins or even improved margins? Because if I'm not wrong, 7.4% were the EBIT margins in quarter 4. versus a negative EBIT margin in the corresponding quarter last year?
Last year was just a beginning, and we just started turnkey works at that stage. So current year would be 18 would be the first one to really look at. And here the business model is that we get a fixed fee of 8.5%, out of which we have to meet our expenses and make margins on turnkey business.
So you would reckon that
there's a limited margin available in this segment.
You would reckon that 7.5%
yes,
odd EBIT margins
yes.
would be stable?
The 8.5% is committed in the contracts for us. So we have to meet expenses out of that, and it would be around that 8.5% or less.
Okay, Mr. Mehrotra, I'm just looking at your FY18 balance sheet. Obviously, it's a debt-free company, and I can see a cash balance also sitting on the books. If you could tell us, how do you plan to utilize the cash which is there on the books? Are there any expansion plans that you're going to undertake?
Actually, the cash position is at 1,568 crore rupees. We have some capex plan. We are in the process of buying some locomotives for a leasing business. We have committed some office space in Delhi. We are looking at constructing our own building in Calcutta. We also intend to put a part of this into a rail concession project we have taken in Gujarat, Bhuj-Nalia project. Some portion of equity will be put out of this. We are also looking at some equity participation in Indian Railway Station Development Corporation. So some outflows will happen in 18-19 towards that as well. And as the scenario can be summarized, we are comfortable in terms of the capex commitments out of this cash, and working capital also. Out of this also we will keep working capital requirements. This also has an element of bonds investment. We have invested out of this 120 crore rupees in tax-free bonds of IRFC.
Okay.
That's a medium to long-term investment.
Sure. Just a last question from my end. What's going to be the dividend policy that the company would be adopting for FY19? You've declared dividend for FY18, correct?
Yeah, we have declared dividend of 40 crore rupees or 2 rupees per share. This is the final dividend. We have already paid in January interim dividend of 70 crore rupees. For companies like us, the dividend policy is that we have to pay minimum 30% of PAT or 5% of net worth, whichever is higher. So this can be taken as a policy for the time being.
Okay. My final question, Mr. Mehrotra, what do you expect FY19?
And this dividend is in yes.
No, sorry. Please make your point.
I have covered this saying that we have committed 22% growth over FY18. In FY19, in MOU already signed with the Government of India. So 22% minimum benchmark in growth top line we will try to achieve. So I think that would be the highest growth committed by us so far in any of the MOUs we keep signing with the government.
Okay, so 22% minimum growth at better operating profit
am I clear
margins.
On that? 22%, yeah.
Yeah, at better than.
Of course, when the revenues of the profits should also.
But if the margins improve, Mr. Mehrotra, is it a safe chance that the bottom line numbers would grow faster or higher than the top line growth of 22% that you are speaking about for FY19?
This will depend upon the composition of exports, consultancy, turnkey, and other businesses. As you know, the consultancy per se is more profitable than followed by exports, followed by local leasing business we have, and turnkey contracts are a moderate level of margin compared to the other businesses we are into. So put together, the exports would be higher in 18-19. We are targeting about 400 crore rupees of exports starting from Q3 onwards, which is a part of this 22% growth. Okay. So I would not like to give a definite number. I would like to say that we have committed a very high growth in 18-19.
Yeah, well, market is taking cognizance of that, Mr. Mehrotra. Your stock has done really well in the last 3 or 4 days, and therefore IPO investors too should be happy. All the best for the quarters ahead. Thank you so much for taking the time out and being with us.
Thank you.
Well,
Thank you very much.
Maybe the market preempted this, but hey, Navneet, just the last 3 days, actually, it's not even the last 7 days, the last 3 or 4 days, and that one big move that we saw, I think, on Friday.
18% higher.
Yeah, just big moves there and doing rather well for itself as RITES. Now, you know, ordinarily today, because it being a Monday, we would have gone to a global voice and we would do that too in just moments from now. But I think HDFC numbers are out, and therefore we should talk about them. Let's just bring up that stock as well and just see what it is doing. The number should be out any moment. The stock looks slightly weak today, as is the HDFC Bank too. So the HDFC twins have looked slightly wobbly today. But let's wait for the numbers to come out and then try and figure out what to expect, or what to expect stock to do going ahead as well. We should have those numbers any moments right now is HDFC. So let's wait and watch what they deliver. In the meantime, while we just wait for those numbers to come out, keep in mind that the Nifty Bank is doing rather well for itself, 172 or 173 points. So that's holding up very, very well. HDFC is just starting to inch up a little bit. Keep that at the back of your mind. But the Nifty Bank is the main index to monitor. That one is doing
Neeraj,
really,
profits
well
have come in at 2190 versus our estimate of 2167. The comparable figure for the corresponding quarter was almost 1555. So on the bottom line front, definitely it's been above what the street was estimating. Those net profit figure is now flashing there on your screen of about 2190. We'll get you more details. The NI growth, remember, as per the expectation, the NIMs were expected to compress by 10 bips to almost 3.9% versus 4%. Loan growth was expected to be somewhere about in the range of 17 to 18%. But overall, the bottom line definitely appears to be above what the street was expecting. And the provision number is just about 20 crore for the quarter versus 163, which was in the corresponding quarter. So definitely provision and loan losses, that number has been on the lower side. So that's one positive takeaway coming in as of now from HDFC numbers. We'll get you more details in just a while, but stocks definitely seen some bit of recovery from the lows right now, but still it's trading. It's actually inching higher, but still sitting with cuts of almost 0.5%.
Well, interesting moves there. The last couple of days has been under pressure, yes, but otherwise the numbers on the face of it look okay. Saloni or Shraddha, one of them would be mic'd up any moment to tell us more about this, but interesting quarter out there from HDFC. The NI numbers will be released any moment. I doubt that the asset quality would have shown too much of a fluctuation. If anything, the commentaries in the recent past from the HDFC management didn't lead to believe that there were some pressures within the segment that they operate in. So I think that would have by and large stayed okay. As of now, we just have the net profit number, which has looked higher. But as Navneet said, let's wait for more details to come out, and then we'll be able to talk about how good this number is looking like and whether or not there is more in store. The stock has recovered almost all of the lost ground, currently at 2044, but this might just be trading activity. People who believe that the numbers are great would just go out and put in and they buy orders. This could be short-lived as well. Revenue is up about 20%, so that's okay. We'll get the NI numbers any moments from now, and the asset quality numbers should come up any moment from now, and that too would be important to monitor. But the reported bottom line numbers look reasonably okay for themselves. Keep in mind, HDFC the last 7 days hasn't really had a big dash on the upside, so it's not approached this earnings with a fair bit of flair. Just about 2.5% kind of an uptick for HDFC over the last 7 days compared to a clutch of other names, and a lot of other financial names have done well. This one has approached this earnings fairly quiet over the last 7 days, just about 2.5% in trade. So let's wait and watch. There, as we speak, the stock is giving up its numbers as well. Would really be doubtful, Navneet, to see some major asset quality stress on the big boy.
Yeah, definitely. And well, we're talking about HDFC here. But just looking at the numbers, the finance cost is 6352 versus 5754 versus the corresponding quarter. Revenue from operations is at 9883 versus 8259 that was seen in the last year. So uptick definitely seen in terms of revenues from operation. I think that's an uptick of nearly 20% that we're seeing. Revenue from operations are up 20%, and profits, as we highlighted, has been higher than what the street was expecting at 2190. Let's get in Shraddha Babla, who tracks the space pretty closely, to check how the numbers are looking like and to decode if there is any major takeaway from the numbers this time around. Shraddha, over to you.
We don't really have the press release which is out yet, so I don't have too many numbers. Like you said, yes, revenue from operations have risen by a good 19.7%. Net profit has increased by 54%. But also remember, this may look optically higher because you have Ind AS transition, which could have had a bearing on these numbers. Remember, even if you look at the provision number, that has fallen sharply from 163 crores in the last year quarter to just 19 crores again. HDFC was expected to benefit from the shift to ECL based accounting norms, and that's why the provision number was expected to come in lower. That apart, even if you look at the profit before tax performance, the numbers higher by about 51%. So of the numbers that we have so far, they look like they're in line with estimates. We're still waiting for the AUM growth numbers to come out. 17 to 18% is what we were expecting. The loan growth in the previous quarter was about 23%. So we expect that to normalize, because in this quarter, HDFC has assigned loans of about 9,700 crores to HDFC Bank, which it hadn't done in the last few quarters. So that's one important number that we're watching out for, as is the gross NPA. Not that we're expecting too much deviation in terms of the GNPA number also from 1.11%, but based on the first looks of it, it looks like a decent set of numbers. More details, of course, awaited. The stock in the meanwhile is trading about flattish now.
Very interesting, Shraddha. I'm sure you'll get us more updates as and when they come in, but since you don't have the press release, won't really ask you for more. Thanks so much for joining in and giving us that initial perspective on HDFC. The stock lying absolutely flat, so no big moves out there on HDFC. The management just about getting ready to address the media. Important to hear both Deepak Parekh and KK Mistry, as well as some of the other spokespeople, of course, talking about this quarter one and then arguably the outlook ahead. It's a busy week for the HDFC stable. A busy last 10-15 days, right? HDFC AMC IPO got oversubscribed on Friday. HDFC numbers today. Tomorrow, remember, Bloomberg Quint has already broken that story, but tomorrow you will probably hear something about the QIP from HDFC Bank. Then you have the listing of HDFC AMC as well. HDFC Standard Life, in the meantime, came out with numbers which are very good, and the stock did reasonably well too. So that whole HDFC family has had some very interesting last few days. And let's wait and watch.
I think they've got Escorts number as well. I've just got the press release. It's an earnings heavy day. Can we just pull up the stock price of Escorts? We'll get the numbers for you flashing on the screen. But revenue from operations is at 1511 versus 1163. So that's an uptick of nearly 30% that we're seeing for Escorts. Look at the stock. It's just recovered from the day's low. The profits for the quarter have come in at 120 crore versus 62.6, which was seen in the corresponding quarter of last year. And if you have to look at the fourth quarter of FY18, that time also the profits were at about 112. So definitely on the bottom line front, it's looking good. And not to forget, they've been posting good volume growth in terms of tractor sales for the first quarter, which has been on the higher side. So there were some sort of tailwinds definitely auguring well for Escorts, and the numbers are looking good. On the top line front, it's a growth of nearly 30%, and the bottom line too is looking pretty good. But 286 is the finance cost, which has gone down quite substantially versus 795, which was seen in the corresponding quarter. And let's not look at the corresponding quarter, but sequentially also last quarter, I guess 628 was the finance cost versus now that we've seen of almost 286. We'll get you more details with regard to what's auguring well for something like Escorts. Tractor sales definitely doing good, but the railways and the construction side of the business, we'll get you more details on that front.
Well, so that's the other big boy is Escorts. Do we have the HDFC management starting to speak? Okay, we'll just have them. In the meantime, Shree Cement numbers were out, remember, some time back. By their own usual standards, Shree Cement disappointed a bit, but of course, they witnessed a 37% fall in its June quarter profits. Volume numbers not out as yet, but we'll talk to the management about that. We'll need the update on the working capital days, amongst other things as well. Because they were the highest amongst the peers. So let's talk about all of that and more with the Managing Director, Mr. H.M. Bangur. He joins us right now on the show. Good having you, Mr. Bangur. Thanks so much for joining in. would you believe that this quarter was disappointing in more ways than one? And what are the reasons that contributed to this quarter being slightly subpar, a thing of the past, or do the issues persist?
There are many questions in one question. First of all, it was definitely disappointing as far as total profits were concerned. Number two, good point is that at least 18 to 20% volume growth is there. And this volume growth is there for all the time, and it should improve only. The realization has been lower by 5%, compounded with high cost. So the EBITDA level per ton or overall EBITDA has gone down substantially. This is not sustainable. In near future, we expect betterment of profit. And if I have to say, for the whole year, we expect something better profit than the last year.
Okay. Mr. Bangur, just want to clarify, you mentioned volume growth of what, 18 to 20% that you've seen in the quarter?
Yes, I'm saying that.
Okay.
12 to 13% in North India and about 35% in East India.
Oh, interesting. Okay. So the volume growth is between 18 to 20%. And did I hear you say, Mr. Bangur, that the cost pressures which were at a higher clip in the quarter gone by might not sustain, and you will see some normalcy to the EBITDA numbers?
EBITDA numbers should be normal. Cost reduction is difficult as the international prices of coal, petcoke, all our fuels are still high. But gradually the prices has to pick up. These prices are not sustainable. For a small amount of time, these were the prices, but we expect betterment.
Sir, correct me if I'm wrong, I guess you have higher dependence on the petcoke size, and that's precisely the reason why we've seen the margins also declining quite substantially. Will you look to rejig if the prices remain at elevated levels for petcoke prices in terms of your sourcing?
Nowadays, we use petcoke and coal almost between 40 to 60% depending on the price. Sometimes coal 40%, sometimes petcoke 40%. Now the price difference between coal and petcoke has hardly become 2%. Okay. So petcoke is not going to matter us anymore, whether it is totally banned or it is allowed. Our dependence on petcoke was always there, as we had the option to use any of the fuel. But now it is no more an alternate fuel, it has become the mainline fuel.
Right.
So it doesn't matter.
Okay, so you will be working around with that ratio of 60-40 as you mentioned between petcoke and coal as the prices pan out for both. You mentioned realizations for the quarter down 5%. Could you tell us what are the price trends that are currently there? Because we've not seen across India so much of price increase which took place. And if the prices were down, realizations were down 5% in first quarter, can we expect the same trend in the second quarter as well?
No. First quarter the price have come down from 41.50 to 39.50. 200 rupees have come down, net of excise and GST. And in the subsequent quarter, we expect it to increase.
Okay. So, Mr. Bangur, in which case would the realization picture remain strong for the rest of the year as well?
We expect so that these prices overall are not sustainable, as many of the units will not be in a healthy situation. And overall, for some time, the manufacturers has to bear the price increase of sudden price increase of coal. But ultimately, it has to be passed on to consumer, otherwise the business will not remain sustainable.
Manufacturers, or at least large manufacturers such as yours, will be able to enjoy good realizations and still have volume growth which is northwards of 15%, Mr. Bangur? Would 18 to 20% or maybe slightly lower than that be a good average for the rest of the year as well? Volume growth?
Volume growth of 18 to 20% will not be there, as the cement market is growing at 8 to 10% only.
Okay.
So overall, the volume growth will not be that much. Some volume growth will be compromised and the price should increase, because the industry overall is not growing at 20%. It is growing only at the rate of 10 to 12% this year. Otherwise, normally it was going at 7 to 8%.
Okay. There was this whole conversation, I think, Mr. Arun Jaitley probably mentioned in his blog that after the first rate of GST cuts, cement and a few other commodities or few other items would be up next as well if the revenues of GST permit. If indeed the GST rates on cement are slashed, would that aid volume growth at all, to your mind?
No, I don't think so. First of all, at present there is no talk of drop in GST rate on cement, so this is a hypothetical question. And secondly, definitely good amount of growth has come from the government. That is the many projects of 500 to 1,000 crores where a lot of cement is needed is released by government, which are not even being talked about. But on the ground reality is that good cement consumption is there.
Okay, you also recently ramped up your capacity in states like Bihar and, correct me if I'm wrong, it was Rajasthan. So after ramp up of that capacity, do you think you should have done higher volume growth than what you've done this quarter? And also tell us, going ahead in subsequent quarters, can we expect a higher figure?
No. The ramp up was for the long term period. That today the ramp up is there, tomorrow the volumes will increase. This is not the way big industries are put. We think that these capacities will be needed 2 to 3 years ahead of time.
And is there
secondly,
Go ahead, make your point, sir.
And secondly, the volume growth, as I was saying, that if all India volume growth is 10% to 12%, somewhere it has to be tapered down to those levels only. So instead of 18-20%, we will be little better than the all India, but such volume growth will not be there.
Okay, sir, we'll leave it at that note. Thanks a lot for joining us today and taking us to the highlights of the quarter gone by. That's Mr. Bangur of Shree Cement. Clearly, the numbers not looking that great, and the reason for that is higher input cost pressures that they've mentioned. Remember, Shree Cement historically has had a higher weightage with regard to petcoke prices, which have been inching higher. But they've clearly stated now they're okay to recheck the ratio between 40 to 6%, depending on the prices between coal and petcoke. But Neeraj, the stock is still in the green. I mean, we've not seen any major correction, though the operating performance definitely disappointed the street. Margins have come off quite sharply for the first quarter. Profits are down almost 37% in trade.
A bit of a deviation from what the others have shown, though I must say the volume growth numbers look fairly impressive, better than the estimated 17%. The problem, or a bit of a cold water on that, is also the fact that the management is saying that that will not necessarily last.
That's right, and this is a company I think the street has been giving better valuation multiples as compared to the other cement players. But well, we'll see how the other numbers also pan out. So far, we've seen from Ultratech, ACC and Ambuja, but some of the mid-cap cement companies are still yet to come out with their first quarter numbers. All right, that's about the earnings, but let's switch focus back to markets. 11,312 on Nifty, comfortably trading now above the mark of 11,300. Bank Nifty 27,813. Remember, today's gains have come in actually from a couple of your heavyweight banking stocks like ICICI Bank as well as State Bank of India. Good time to bring in our technical experts on board and get their view on the markets, what to do around these all-time high levels in Nifty, Bank Nifty. Hemen Kapadia of KRChoksey is joining us, and we'll also get Sumeet Bagadia of Choice Broking, who's joining us on the show now. Good afternoon to both of you gentlemen. Hemen, let me come to you first. Let's say if somebody's missed on this rally, has not taken any position on the long side, does this warrant any fresh position or just stay away?
Very good afternoon to you, Navneet. Bad question. I don't think I have an answer to what you have, because if you missed out, left out feeling, at this level everything is hunky-dory. It seems too easy and too nice. So no, I would prefer to stay away, because I mean, there are no signals of a reversal, overbought, whatever, but just the hourly chart seem to be showing just a little bit of a twitch.
Okay, just a little bit of a twitch that it's coming in the Nifty as well. We'll take in some more thoughts from Hemen, but just need to cut across to Deepak Parekh as he's addressing the media post the HDFC numbers.
On average has been approving approximately 8,300 loans on a monthly basis to the EWS and LIG group. On a pan-India basis, the average size of the individual loans stood at 26.4 lakhs as against 25.6 lakhs in the previous year. The assets under management as at March 31st, 2018 stood at 3,99,511 crore as against 3,38,478 crores in the previous year. The corporation ranks amongst the top performing institutions under the credit linked subsidy scheme. The corporation's efforts towards the CLSS have been well recognized. The corporation has been recognized by the Ministry of Housing and Urban Affairs and its contribution in the Pradhan Mantri Awas Yojana for the second consecutive year. This year, the
Okay, well, lots more, and of course, we'll be hearing this conversation and giving you some snapshots of what are the key takeaways from that meet as well. Meanwhile, some numbers from GIC too. So lots of stocks, lots of results flying around, lots of conversations. GIC is up about 6%. The net profit there has really shot up. Net premium has stayed okay, par for the course, but the net profit numbers, let those numbers just come again. And those numbers look really impressive. Will come up on your screen. Investment income may have been off, but the net profit numbers are
771, Neeraj.
Yeah, and
versus 390.
Yeah, so those numbers seem really impressive. I don't know if the market is liking that, but yeah, good numbers. The stock seems to be doing okay. Anyways, let's get back to our experts, and then we'll get in the fundamental expert on board as well. But Hemen, you were making this point. Please finish your point. Sorry to have interrupted you.
Absolutely fine, no problem. Frankly speaking, there was the MACD sell on the 30-minute charts on the Nifty and the Bank Nifty. Now the Nifty has reversed that, and we've come to a buy zone again, and the Bank Nifty and the Nifty is still in a sell mode on the 30-minute chart. So frankly speaking, that's a small twitch I was talking about, but it's just a small twitch, nothing much.
It doesn't do much to the trend.
No, I mean, see, it's just that we've had a couple of gaps. I mean, that's okay. We are running away, so fine. But if this early buy, 30-minute buy doesn't come in the next couple of hours, we might just take a small hold. But I mean, frankly speaking, it's we just nibbling, in the sense we are grabbing at straws, and not much, honestly, to look at.
So you're suggesting to buy a put?
Yeah, I'm a slightly conservative guy. So if everything happens too fast, too easy, I am very skeptical and reticent. So dicey call, but yeah, buy Nifty call 11,055, stop loss 40, target 85.
Follow put, right?
Put.
Okay. Sorry.
Sumeet Bagadia, what's your Nifty strategy for the day?
Hi, good afternoon.
Good afternoon.
Markets are looking good to me. We have been giving continuously buy call in Nifty from lower levels. Now, immediately looking at the chart, it seems that the same upside move will continue, and from here on, what we can see is Nifty moving up till 11,400, 11,500 levels. Those who have taken long positions in Nifty at lower levels, they can hold on the existing long positions. If anyone wants to initiate a fresh long positions in Nifty, then they can go ahead and initiate at the current market price. Any dip from present level should be used as buying opportunity. For a trading perspective, one should maintain stop loss somewhere at around 11,250 levels, and on positional side, 11,200 is a good support. 11,200 is good support for the upside target of 11,400 and 11,500 levels in Nifty. Also, buying Nifty is looking good to me. We can see move till 28,000 or 28,200 levels. For a trading perspective, one can initiate long positions at the current market price with a stop loss to be placed at 27,600 on lower side for the upside target of 28 and 28,200 levels.
Okay, that's buy coming in on Nifty as well as Bank Nifty with the target price of 28,200 on Bank Nifty and target of 11,500 on Nifty. Remember, the maximum open interest and call side for August series, it is at 11,500. But individual stock ideas, I mean, for this afternoon, what are you suggesting?
Couple of stocks. One is Siemens, but I'd like to just change the figure a bit.
Sure.
Buy in Siemens at around 970, stop loss of 955, target 1,000. And I like Sun Pharma. I think the pharma index is showing some signs of life again. So buy in Sun Pharma at around 560, stop loss 550, target 580, and high risk call at in PC Jeweler. Open interest built up, stock looks good, So
Really?
yeah, really.
Okay. Yeah, the stock's just gone up actually. But we've seen these moves, Hemen, coming in the past as well. Let's see if this lasts till tomorrow or no. Buy coming in on PC. What's the target price?
99. We've seen a 15% OI built up, Navneet, and crossover buys on the intraday, crossover buys on the daily. Looks good for a bounce.
Okay, let's see if it works, considering the stock's also beaten down. Let's not forget that. Sumeet, your individual stock ideas?
I have two stocks for the day. First one is from banking space, and that is Axis Bank. Axis Bank is looking good on charts. It has given a breakout. Looking at the chart, it seems that the stock is headed higher. And on higher side, this time we can see levels of around 600. So for a trading perspective for next couple of days, one can initiate long positions in Axis Bank at the current market price, with a strict stop loss to be placed at 550 on lower side for the upside target of 590 and 600 levels in next couple of days. The second stock for the day is M&M. Mahindra & Mahindra is looking good on charts. Stock can move up till 950, 970 levels in next couple of days. I think one can initiate long positions in M&M at the current market price. If there is a dip of around 8 to 10 points from present levels, then that should be used as a buying opportunity, with a strict stop loss to be placed at 910 levels on lower side for the upside target of 950 and 970 levels.
Okay, those are some buy calls coming in from Sumeet. One of our viewers wanted a chart check on Axis Bank. So Sumeet already has a buy call on that. Ravi Shankar has written to us with a target of nearly 600 rupees and a stop loss of 550. I think that should address our query as well. Okay, that's about Axis Bank, but the other biggie which is contributing to the gains is ICICI Bank and State Bank of India. But before we get some technical checks going on that, let's also bring in Neeraj Dewan, Director at Quantum Securities, who joins us on the show now. Hi Neeraj, good afternoon. Appreciate you joining us today on Bloomberg Quinn. First up, a reaction on HDFC's numbers, which looked pretty good. We've seen the provisions going down. The profit figure was above what the street was estimating. Any initial thoughts on that one?
Yeah, good afternoon. I haven't really seen the numbers in detail, but whatever I've seen of the numbers, actually this time we were carefully watching for the housing finance company numbers, because there was a feeling that with so much competition there may be some downside in the growth that they've been seeing. But looking at HDFC numbers, and I feel that growth will continue, and HDFC has come out with decent numbers, and I think other housing finance companies also, which had corrected a lot lately, some barring HDFC Bank, barring HDFC Limited, the other ones which had corrected a lot also, like Canfin Homes and the likes. I think also seriously one should have a look at those companies.
Okay, in the meantime, some news bits from Gati. The management is clarifying that the board has advised the management to look for a strategic investor or a financial partner, not entered into any binding agreement yet. Well, that's, an unequivocal message that they are about to, or they will probably do that. So no smoke without fire in this case turns out to be true. And maybe that's one reason why the entire logistics space was active on Friday. Consolidation in that space leads to some bit of traction within that space too. And I think the money that, if the Economic Times report is to be believed, the money that is being paid for the promoter stake is higher than the current market value, and that should just be seen well by the street. 10% higher for Gati today after that 8% uptick in Friday's session. Neeraj, just off the bat, any thoughts on these logistic companies? For a while now, while they're always believed to be dark horses which will benefit due to GST or other reasons or the economy pickup, stocks haven't quite set the stage on fire. Does this move, this move may not necessarily change the view on the stock, but do you like the businesses by and large?
Yeah, basically yes, because we also track some of the logistic companies, and even the Container Corporation results also on the volume growth there were quite encouraging. And there are other companies also in the space, something like a TCI, which has been doing very well, and they've been improving the return ratios. So I think this space also, with the pickup happening on the volume front, which I think going ahead should really, that pickup should also increase. So there are companies across in this sector which one needs to look at. And after the recent correction in some of these stocks which I mentioned, like TCI and Container Corporation, even on valuation front, they look attractive to give you a decent return over the next couple of years.
Okay, that's about the logistics space. Neeraj, what about ICICI Bank? Looks like the street's given a thumbs up post the numbers. Do you think all the skeletons are out of the closet for ICICI Bank, considering the higher provisioning number that we've seen for the first quarter?
Yeah, the numbers were pretty good. If you just, forget about the loss that they declared, but that loss was also as a reason of, provision coverage has come up to a very high level. Plus, addition to stress assets also has become so less. So, if that asset quality was really a surprise on the positive side for most of the people, that is why we're seeing that kind of a reaction. And I think that is true to most of the corporate lenders who had come out with results, whether it was Can Bank, whether it is Bank of Baroda. We're seeing good numbers from the corporate lenders. So I think this trend seemed to have reversed, because for so many quarters now we've been seeing, buy private sector banks, sell public sector bank, sell corporate lenders. I think that trend is reversing now. So I feel next couple of years, look good for the private and the public corporate lenders. I think they make a case of a sustained up move. So, we are not saying that we are completely out of woods, because there will be still some hiccups, till the end of this year, because I feel some more stress which is yet to be recognized may get recognized over the rest of this year. But I think this should be the last of the stress, and we are almost at the tail end of stress recognition as far as the corporate lenders are concerned.
I just get worried about these things when almost everybody believes that now the good times are set to begin. Neeraj, therefore my question to you is, one is whether the good times will come and what pace they'll come in, and two, whether tactically is this a good time to buy into, say, an ICICI or maybe an Axis, and we'll get to know about the numbers once the numbers come out, or a State Bank of India, or a BOB for that matter, because their commentary too spoke about this being the fag end. If you had to buy a corporate facing bank, and I would probably include a Yes Bank out there too, what is it that you would like to buy from these 4 or 5 names, which I believe are the obvious suspects?
See, among the corporate lenders, we are positive on Bank of Baroda, Indian Bank, and among the smaller one, Vijaya Bank and Canara Bank. But, I would say that we've seen a very good rally for something like Canara Bank also. It's risen from 220 to 290 plus in a very short period of time. Bank of Baroda has come up from 112, 113, 252 in a very short period of time. So I would say that one should use corrections to buy these stocks. I'm not saying that there will be a sustained up move which will not see any dips. So there can still be some hiccups down the line, and one should use those opportunities to increase position, because about 2 weeks back only we saw these kind of drastic prices, like Bank of Baroda at 113. That was just, I think, 2 weeks back. So after the run up, you should then wait for a correction. But if one is an investor with a long-term view, I think it's a good opportunity. Whenever you get opportunities for the next couple of years, I think you can make money investing in corporate lenders.
Okay, well, clearly banks have been performing really well in today's session, but besides that, you've got some bit of negative reaction coming in on something like HCL Technologies posting numbers. Definitely the revenue and EBIT margins was at a slight miss, but the two big large order wins and maintaining their revenue guidance for FY19 was something which the street was watching out for. I mean, on the charts, HCL Technologies down 1.5% at current levels. Would you take any trade?
I feel there could be one small fall left, not too much. So frankly speaking, it's in a no trade zone, and we've had a large range today. We've seen a downward bar reversal coming in, Navneet, and 970 has been crucial. We haven't sustained above that despite 4 trading sessions. So I'd step back a bit. If I were to take a call, I'd probably go long at 920, but I wouldn't short the stock now.
Okay, stay away right now from HCL Technologies, even at these lower levels. But let's move on and address the chart of the day. The rupee may be on track to see its longest losing streak in over 16 years. But what are the key factors at play? Let's ask Saloni Dhanuka, who's here with an analysis. Saloni, over to you.
So Navneet, after hitting lifetime lows earlier this month, the Indian rupee now remains on track to lose for the 6th consecutive month, as we can see here, which is its longest losing streak since May 2002. Now it has depreciated close to 0.4% so far this month against the dollar, but if you look at the YTD performance, it has been the worst performing Asian currency by depreciating over 7%. The rupee continues to remain under pressure on the back of sustained selling by FIIs in the local equity markets. That apart, strengthening dollar index, improving US economy with expectations of a gradual rate hike continues to weigh on the rupee. Now experts believe that the pace of depreciation has slowed down in the month of July, largely on the back of softening crude oil prices along with heavy intervention by RBI when the home currency breached the 69 mark earlier this month. Now also in terms of foreign fund flows, if you look at that, FIIs continue to remain net sellers in the current month. In fact, there has been a slowdown in selling as compared to last 4-5 months, and hence they expect rupee to trade in a range-bound session near 68 to 69 per dollar mark in the near term, Navneet.
Thanks a lot, Saloni, for bringing that chart of the day. And today, the rupee is somewhere about 68-65 to the dollar. Hemen, you do track rupee charts, right?
Yes, Navneet. I think it's a very interesting scenario. We went to 69.13 in April 2013. We've taken 5 years to consolidate, Navneet, and now we seem to setting the stage for a move on the upside. Having said that, we've had a 10% move over the last 6 or 7 months, Navneet, from roughly 63.20 to 69.20. So time being, we've stagnated. If we don't close above 69.20 for the on the weekly chart, we are into a consolidation phase. A close below 68.20 could mean some near-term strength, but it's taken 5 years to get here, Navneet, and after this rise is retraced and we take out 69.20 probably 4 to 6 weeks down the line, I think we are heading towards 72, 74 and 77 over the next 12 to 18 months. The dollar index 88 to 95.50, 95.50 overbought resistance. We've taken 4 weeks to consolidate, could cool off a bit. About 95.50 we are going to 100. So dollar index and dollar versus the rupee are looking strong. Yes, they've had run-ups, so they may take some more time to consolidate, maybe even correct a bit, but I think the signs are ominous. 69.20, 5 years MACD buy on the monthly chart. I have a feeling we are going to 72, 74 and 77 over there, but the long-term call, not a very short-term call.
Okay. Thanks for that, Hemen. We'll get in some chart checks from Sumeet Bagadia too, but before we thank Neeraj, Dewan, let's talk about a few pockets of strength or otherwise. Neeraj, just quick thoughts. Do you have any views on the luggage companies, luggage manufacturers? VIP, as we speak, is nudging new highs for itself. The numbers, at least the last 2 quarters, seem to have been fairly encouraging and justifying this kind of move that we're seeing in the VIP or a Safari or any of the others. Any thoughts here?
Yeah, though I don't track VIP industries and don't have a target for the stock, but I've been following the numbers. I feel that that is one space which goes with the consumption theme, discretionary consumption, and I think we are seeing that growth in numbers, and I think that will continue for years to come. It is not that 1 or 2 quarters. So 1 or 2 quarters dip. We saw some dips in the 3-4 quarters back, and the stock had corrected. I think if you get those kind of opportunities in a stock like VIP, which the brand is very strong, and you will see a sustained growth for the next so many years, I think one should latch up on those opportunities. So I think VIP also will be in that category, and one should be a long-term investor in this stock and not worry about some aberrations which may come down the line in 1 quarter or other.
Okay. What about your ideas? I believe you've decided to share with our viewers a couple of things that they can look at investing in.
Yeah, we have a buy on JTEC, which was earlier Sona Koya Steering, which because the promoters have now changed to this Japanese company, which are one of the largest manufacturers of steering wheels in the world. And now, with the new management, the focus has come back in the company, and the management focus is to get back the lost market share which happened due to the earlier promoters. And they are now target incrementally 60% market share in all the new Maruti brands, all the new Maruti models which come. And I think, and with the debt also coming down and the growth coming back, this company is available at a very reasonable valuation and give you a very good 2 to 3 years perspective on the growth that is there, which may come because of the domestic passenger vehicle growth, and which is anyways very strong right now. So this would be one idea that we have. Then we even like Aditya Birla Capital, AB Capital, because that is also a conglomerate in the making as far as the financial services is concerned. There you have an NBFC business which is growing at 30-40%. You have a small housing finance business which is growing at 70-80%. Then they are the third largest asset management company in India. Then they have insurance where the margins are improving. So you have all this in one company, and which is something which we can compare to Bajaj Finserv some time back. So I think that company for the next 2, 3, 4 years can see decent growth, and the management focus is to grow with keeping the asset quality under control, which is visible with the numbers. So that can be a good stock for a long-term investor.
Okay, so those are two fundamental ideas coming from Neeraj, one on AB Capital, the other on JT Ket, which was erstwhile Sona Koyo. Neeraj, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views in the markets and also sharing your fundamental ideas with our viewers. Well, I just want to quickly take a technical check on Capital first, if you could just pull up that stock. Sumeet, 5.5% higher. I believe the earnings will come out this week, but on the charts, do you see further uptick for Capital First?
Well, see, yeah, Capital First is looking good. I think in last 5 days, what we have seen is the stock has given a good bounce back move from lower levels, from the levels of 480. We have seen that the stock has come till 560 levels. Still, it seems that the stock can move up. And on higher side, we can see levels of around 590 or 600. So those who have taken long positions at lower levels, they can hold on the existing long positions, with the trailing stop loss to be placed at around 535, 540 levels on lower side, for the upside target of 590 and 600 levels in next couple of days.
Okay, so it can be a hold on Capital First, which is sitting around levels of 560 currently. On that note, before we slip into a short break, here's a quick snapshot from the Alpha Idea Summit, where we got you some of the best minds in the industry all through the Saturday.
Our idea is Hindustan Foods. Firstly, let me just preempt this. We've been an investor since, so we've been an investor. We hold 20% of the company. So please assume all the biases that you want to think of. Yeah, just 1 minute. That's it. So we've invested at $40. It's at 320 odd bucks right now. It's 8x in 2 years. I still think there's a great opportunity. Doesn't mean that I'll not sell tomorrow. I could. Okay, but more important is that revenues of the company when we invested last year was 35 crore. Sorry, the year we invested was 35 crore. Last year was 140 odd crore. We've already had a business plan which has been communicated to investors. So we'll be a 1,000 crore company next year, 2020. 35 crore company will become a 1,000 crore company next year. I would presume, and I'm shooting right now, it's not part of any board or anything, but I think we'll have an opportunity of being a $500 million company in the next 3 years after that, or 2 years after that. I think that looks the visible roadmap. So obviously a business which did not, almost non-existent, will become disproportionately relevant, and you can presume what margins you'll get and so on. So suddenly the ROI of the business will move from 16-17% that you used to do to possibly closer to 22-23% or more, which is obviously great for a consistent ROI for almost the next 10 years post that.
Infratel remains, as I mentioned before, Airtel and Vodafone's last valuable asset. There is no other way they can get money other than infusing equity. So they will have, I mean, they cannot impair the economics of this particular entity for short-term gain. Solvency issues with Voda Idea, I showed you the massive debt to EBITDA coverage ratios, but no player in the world is a two-player market. So if they decide to exit it, somebody could acquire it. And regulatory changes with towers. So today, what is shared is only the passive infrastructure. Tomorrow, if they share all their active infrastructure, which is the antenna and the radio, that could free up significant capacity. But it's unlikely to happen because the market leader and the most efficient network, which is Reliance Jio today, will not allow that to happen. It will not want to cross-subsidize somebody else's network. So how do we execute this idea? I feel there is still some risk of being too early into the trade. There is a decent probability that nothing could happen for another 6 months because we still have to see how the Voda Idea merger fructifies. I feel that there will, the stock price could be depressed because of that. Airtel and other shareholders are likely to continue to dilute stake to fund So there could be an overhang on the stock price because of that. So my sense is this is an interesting idea. It is not something you could buy tomorrow in a full position. I think you should spread your bets and keep an eye out for tendency growth before you want to really increase your position size. And I feel that you need to have the patience for 4 years for this entire thesis to play out.
What we like at the company level is strong free cash flow generation. The company has 200 crores of cash, very strong, again, expansions to generate incremental ROC. Again, focusing on that, but we think it's quite a unique situation to be there. And as I said, only runs raise capital. And in the last 6 years, they have grown at this rate, but reduced working capital days. So they've come down from 124 days to about 88 days at this point. And again, this is slightly lower because in the top line now you have ex-GST sales, whereas in the working capital you show the full GST sales. So effectively days will probably be closer to 80 days. So we think that's again a sign of very good capital management that the company is doing. Okay, just quickly wrap, sorry. Market, again, continued category acceptance. This continues. ADD, whether it continues or not beyond 222, we don't know. And if China, again, activates something, there's always some question mark and risk around that. Discretionary item, we all know what that means. Competitive intensity, would that increase? As I said, they seem to be very rational competitors, used to high returns, high margin businesses, may not do something very disruptive. Plants should get commission, that's standard. And again, expensive.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is the show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Countdown right here on Bloomberg Quint. 25 minutes left for the markets to shut shop. Just bring up what Europe is up to. Just need to mark the global markets. They are slightly soft. We are helped by what's happening to the Nifty Bank, to be honest. Add to that the fact that Reliance Industries as a stock is doing well. But the Nifty Bank contributes to this move. Otherwise, the rest of the world is a lackluster place. We are doing really well, primarily because of what the Nifty Bank has done. Just looking at stocks which are nudging new highs. By the way, stocks which were mentioned on Alpha Ideas 2020 meeting, just 2 or 3 that I want to bring out. And I hope none of them have made it to Yash's list. But Muthoot Capital Services was a recommendation by a gentleman called Prabhakar Kudwa, runs a portfolio management firm out of Mangalore. And Muthoot Capital is up 7.5. Hindustan Foods was a recommendation by Nikhil Vohra. And that stock is up about 10%, though the volumes are a bit suspect. But that stock is up about 10% today. Again, recommendation at the Alpha Ideas meet, and people got to see. So there are some very interesting moves that have happened. Just Engineering and SME stock, you won't have that here, but that stock too apparently has done very well for itself. Well, people have made some money, and I'm happy, BQ is happy that we've been able to bring those ideas to our viewers as well. However, let's try and find out, other than those ideas, what else is moving around and what's made it to Yash Upadhyay's Fab 4 list. Yash, good afternoon.
Good afternoon, Neeraj. So the first stock on my list is Schneider Electric, and this one's locked in an upper circuit of 20% after returning to profitability in the first quarter of FY19. Now, they reported a net profit of 8 crores, which is the first in the last 5 quarters, and their revenues, adjusted for excise, that too posted a healthy 19% growth, coming in at about 343 crore rupees. So the stock is buzzing today. Gati is up 11% on the back of media reports that TVS Logistics is in talks to acquire the entire 23% stake of the promoters for 1,500 crore rupees. However, the management came out with a clarification that it has not signed any binding agreement, but they are open to the proposal of inducting a new strategic partner. Thyrocare, this one surged as much as 7% today, following up on its move from Friday, gaining for the second day after the company said that it would consider the proposal of a share buyback at its board meet on August 4th. And lastly, Canara Bank, I would like to highlight. This one's up 4%, gaining for an 8th consecutive trading session. The stock has managed to return more than 28% in that period, with volumes too coming in at the higher end of the 20-day average. Back to you.
Some very good gains. Yeah, Yash, thanks for putting that into perspective. Some very good gains for the PSU banks as well. Hemen, let me give you a tough one. If you had to initiate a trade, somebody, let's say, is very enthused by looking at the Nifty Bank and wants to initiate a trade either on the Nifty Bank or on ICICI Bank or any of the PSU banks, BOB, SBI, or the smaller ones, say a Canara Bank, for example, what would you find the most attractive on the charts?
PNB.
Wow. Okay. The one stock that I didn't mention, you had to pull that up.
Yeah.
But PNB. Okay. Why this one? Why not? I mean, okay. And what are the targets out here?
Okay. PNB is currently at 86. It's okay if I have a positional view, right?
Of
not
course,
a very short term.
Of course.
Fine. The whole move from 230 to 72 is now over. We formed a short, possibly medium-term bottom. There's virtually the very limited downside. Don't think there's downside below 80, though the bottom is at around 72. I'm looking at a price target of 95, 105 and 120 in the next 3 to 4 months. I have a pretty high conviction on this call from a positional or a maybe 4 to 6 month point of view. Neeraj.
So you're betting on stocks which are beaten down a lot? PNB, PC Jewelers?
Yes.
Because they may have bottomed out according to...
Yes, Navneet. I think what has happened is if you follow the Elliott wave system, there's a particular formation which has happened in the stock that you mentioned. I think you got them perfect. Coincidentally, many of the stocks that you spoke, and especially the beaten down ones, whether it's Union Bank or Andhra Bank or PNB, all seem to have BOB, but now BOB is history. So all of them seem to have formed this particular pattern where, okay, I'm not saying this is a rally, it's a recovery, but the fall is a big fall, and we are going to retrace a percentage of the fall. And all of them are showing a very peculiar pattern. That's why I wouldn't recommend something like a PNB, but high conviction, because I have a belief that it's formed a very perfect pattern. And this Andhra Bank, BOB, we are too late, but Union Bank, many of these stocks have done exactly the same thing. So with hiccups, a few hiccups here and there, for the next couple of months, all of these PSU banks are looking good, and the Nifty PSU Bank Index is also looking good. The BSE even the BSE PSU Bank Index is looking good. So it's the BELs are looking good. BEML.
Yeah, PML is up in trade today, and there's been both price as well as open interest action that we've been highlighting since our F&O show at 10. 892 for BEML right now. Well, let's bring in another voice, Dharmesh Kant, market expert, who joins us on the show now. Hi, Dharmesh. Good afternoon. Good to have you on the show. A lot of earnings have come out today. A lot of reactions have been seen on screen. I want to pick up the insurance space. New India Assurance came out with the numbers. You also had GICRE, which is bucking the trend in today's session. The numbers for both of them looked good. If you did get a chance to look at any of these numbers, any initial thoughts on them, and which is the top pick according to you in the insurance space?
Yeah, good afternoon. See, as far as insurance space are there, I did have a chance to look at the numbers on a prima facie basis, not in detail. But the trajectory which even the private sector insurance companies who have reported the numbers, the trend is that around 15 to 17% kind of a CAGR you are going to have in this space for next 5 to 10 years time frame. In between that, as the markets, these are the very slow sector, very slow penetration levels happen, and things go on at its own sweet pace, and they are not favorites of speed. I mean, the people who like speed, so they are not that type of stock. So if you have a horizon of at least 5 to 7 years perspective, if you have a long-term horizon, keeping India in mind, keeping the type of penetration which is required for this space when you compare it vis-a-vis to developed economies like US and Europe. So plenty of space out there. All these are likely to be multi-baggers, 3 to 5x kind of thing. But again, the point is you need to stay invested for long perspective. So I mean, all the plays are looking very attractive. They all are growing at the same pace. I would be particularly interested in the life insurance space, and there also traction should be high. GIC anyways is doing well.
Okay, yep, GIC is doing well. New India Assurance also sitting with gains of 6%, 12% higher for GIC RD. I want to pull up the intraday chart of Ultratech. That's seen some buying momentum coming by in the last 10 to 15 minutes of trade, and now the stock's almost a day's high, sitting around the levels of 4238. Sumeet, on the charts, the move that we've seen in the last few minutes of trade, what do you make of it?
Can you please repeat the name of the stock?
Ultratech.
Well, see, most of these cement stocks are looking good to me. What we can sense by looking at the charts is that Ultratech Cement is giving good move, and now if the closing is seen above 4230, 4240 levels, then there is a possibility that from here on we can see a good move in next couple of days. Stock on higher side can touch levels of around 4400. Even there is a possibility that we might see levels of around 4500. So for a trading perspective, those who have taken long positions, they can hold on the existing long positions. And if anyone wants to initiate a fresh long at the current market price, then they can go ahead and initiate the long positions for the upside target of 4400 and 4500 levels in next couple of days.
Okay, that's interesting. Stocks which are nudging new highs today also include a Delta Corp, which is up about 4%, 247. This is trading at fresh 52-week highs for itself. Dharmesh, did you get a chance to look at those numbers? And if so, has it kind of mended some of the losses that it incurred in this ensuing 18 months, and does this time provide an investor to buy into a business which is arguably going to show growth going ahead as well? I mean, they're opening casinos at the raised of knots across the country, and it doesn't seem like that the law is against them.
Yeah, as of now, it does look like, and earlier the perception was that the laws will be against them. I used to track this company earlier very closely, but somehow I have a feeling that all these kind of businesses in India is very politically sensitive. So you don't know when the law or the state law will turn against you, and you have to close your shop in a particular state or even on a India level basis. So India, I think it won't be possible as of now, because one has to open up such avenues. But again, this all is subject to wills and fancies of the political system which is there. So eco-political scenario, whenever any company is plagued by that, generally I tend to avoid those kind of stocks, because it becomes a trading play rather than a fundamental play where you can take a 5 to 10 years kind of a horizon or a perspective. So that is not there. Having said that, the numbers look attractive. Business per se, if they're allowed to prosper, huge potential is there in the business itself. So no doubt about that. Even the food and beverage segment in this business is going to pick up in a high way. But again, within inverted commas, the concern is how the politics is going to take this business. So I stay away from that.
Okay, fair call, and appreciate that comment as well. Well, what else? Moving around, Muthoot Capital is on a roll today, 8.5% up now, 12.45. We mentioned about how this stock was one of the recommendations out there at the Alpha Ideas meet. 8.5%, 12.45, volumes which are substantially higher than the 10-day average as well. The 10-day average is about 48,000 shares today. The volumes are 91,000, so almost double the volumes on a 10-day average basis as well. Good price, good volume action that we're seeing in Muthoot Capital. in the session today. Okay, lots more to talk about, but it's 3:15, so let's get in a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so Axis Bank will report its numbers today. It's trading much higher today. It's up almost 3% in trade. The dealing rooms that we spoke to do indicate that a lot of accumulation is happening. They believe that the numbers will be strong, the management commentary will be strong, and there's a possibility of, announcement of a new CEO that could come in. So Axis Bank is something that, apart from the reasons, a lot of other reasons people are watching out for. Some of the large domestic funds have turned active on Tata Steel. Over the past few weeks, we've seen that metals have actually been under pressure. But of late, again, there seems to be accumulation. It's moved up on decent volume. So Tata Steel is the second one. And PSU banks as such, generally no bank in such, but overall dealers believe that the rally will continue on the PSU banking space. So PSU banks are something that they're watching out for. But Yatin, what are you hearing?
Piramal Enterprise, that is one stock which is on the dealer radar. Dealers do recommend a buy at lower levels. Of course, they have reported their numbers already, post which the stock has been flattish in terms of performance, but dealers are, bullish on this name. Apart from that, IDFC Bank, this is also one stock which is bouncing back. It trade 5.5%. On this one, dealers on the basis of F&O trends do recommend a BTSC trade. Remember, they also report their earnings, today. And finally, we have TVS Motors. This is also one stock which is under continuous pressure, has been correcting significantly from levels of 700, and dealers do indicate that now FIs are sellers in the trade.
Okay, FI sellers in the trade 2.5% lower for TVS Motors in the session today as well. Thanks for that, Yatin. Dharmesh, you want to come in on this? I mean, a lot of people might think that there is value that is emerging in two-wheelers by and large and TVS Motors as well. If you were to touch, would you first invest in a two-wheeler company currently? And if so, would it be TVS Motors?
Yeah, definitely. Post the numbers were reported by all the, two-wheeler companies. The stock saw big correction happening, be it Hero MotoCorp or Bajaj Auto or TVS Motor. So, but I do think even for four-wheeler space, Maruti has corrected quite significantly post the numbers were announced. I think some profit taking was there on the table to be taken from them, because most of the valuation from FY19 earnings perspective has been discounted into the stock price. But again, there's a huge value out there, because all the fundamental, if you look at the macroeconomics, the reasons why one was buying into the two-wheeler space is still there, and it will be, getting better as the, monsoons roll out and we go into the election year. So per capita income and everything is going to rise only from here. At the same time, the numbers which they have been reporting is okay. There's nothing wrong out there. They have been having a good growth numbers into the space, and we are moving into the festive season. So I think even from trading perspective, Hero MotoCorp stands the top bet out there, though I won't be buying TVS Motor just because valuations seem too rich even after the correction on the TVS Motor. But Hero MotoCorp remains the top pick out there, followed by Bajaj Auto. These two counters, I think one should start accumulating now, maybe in a segregated way, 30% now, and if 5-10% more correction happens, the balance of the money which is desired to be allocated in this space should be allocated. So Hero MotoCorp and Bajaj Auto is a good buy from 3 to 6 months perspective.
Okay, so that's the top pick coming in from Dharmesh on Hero Moto as well as Bajaj Auto. Remember, the valuations of both are just around the same. They trade at 16 to 17 times. But I want to pull up Bharti Airtel. It suddenly shot up in trade, and now it is the top gainer in Nifty, sitting with gains of almost 5% in trade. Watch out, 6% higher on Bharti Airtel. Sumeet, you want to come on this one? A sudden surge seen for Bharti Airtel, up almost 6% in trade?
Sudden surge in the stock today. It seems that if the resistance are taken away, resistance is placed at around 388, 390 levels. Once the stock is able to break the resistance on higher side, then there is a possibility that we might see short-term bottom in the stock. And if the closing is seen above 390 levels, then there is a possibility that we might see a move till 425 levels. I think those who have taken long positions, they should hold on the existing long positions with the trailing stop loss to be placed at 370, 371 levels on lower side. For fresh long positions, once the stock is able to break 388, 390 on higher side, then one can go ahead and initiate the long positions for the upside target of 400 and 425 levels in next couple of days.
Okay, that's Bharti Airtel for you. Let's get going and get you some closing strategies from our technical experts. Hemen, 10 minutes to go. Any BTST or STBT?
I have a STBT on Berger Paints. We're at around 313. I'd wait for a small bounce to around 315. Stop loss 318, target 307. STBT on Berger Paints.
Okay, very quickly, Hemen, would you suggest somebody to take a position in Bank of India for the next 5 to 6 days? Harshal Patel on YouTube wants to know.
Frankly speaking, I am clearly bullish on the entire pack. But from 76 to 104 in 11 trading sessions, I wouldn't be so brave. I'm not saying it's going to go up, but I'm not sure if the risk reward.
So you won't advocate taking a fresh call?
No, I won't.
Okay, no fresh position on Bank of India is what Hemen is suggesting. Sumeet, your closing strategy?
Vedanta is looking good to me. One can initiate long positions in Vedanta at the current market price, with a small stop loss to be placed at 221 levels on lower side, and on higher side one can expect targets somewhere at around 235 levels. I think for next 2 to 3 days one should initiate long positions in Vedanta at the current market price.
Vedanta, it is at the current market price is what Sumeet is saying. Just look at that move on Muthoot Capital. I'm hung up on it simply because of the kind of volumes that exist there. Do you track this one on the charts, Sumeet Bagadia? 11% up now. Muthoot Capital, not Muthoot Finance.
See, Muthoot Capital is looking good to me. The stock has given a very good move in last 3 days. The stock has moved from lower levels to and has given a move around 250 points. I think the stock can give more upside from present levels. Those who have taken long positions, they can hold on the existing long positions. And if anyone wants to initiate a fresh long position, then they can go ahead and initiate at the current market price. And from here on, we can see a move around 80 to 100 points in the next couple of days.
Sure. Do you track this one? Fundamentally, ROEs northwards of 18-19%, not too many NBFCs which tend to do that. It's a small company, a 1,700-1,800 crores of market cap, stable promoter holding.
You're speaking about Muthoot Capital?
Yes, I am.
No, because there are plenty of good, options out there in the NBFC space. So usually I tend to avoid them. But NBFC as a space does look quite interesting, and I think, from the home housing finance companies, so they look pretty attractive. Canfin Homes, LIC Housing Finance, Indiabulls Housing Finance, they all have moved. But again, I think there's plenty of scope left out there, so that they can be bought into. Pure NBFC plays like Bajaj Finance and all should be avoided now because valuations look too attractive. And these plays, they are most of just mid cap and small cap. Some trading rallies are emerging, so it's more of a catch-up kind of a thing. So one should avoid them, to my mind.
Dharmesh, what about any other stock from the broader markets that at current levels looks attractive to you and you would like to share with our viewers?
Yeah, I think from pharma space, Divi's Lab will look quite attractive to me because basically it's an API intermediary player. They supplies, they are not into any branded medicine or generic place. And today the stock price has moved, but again I think there is a valuation comfort. The company has been consistent with their earnings trajectory, and they are scheduled to report their numbers on 4th of August. So where I think 20-22% kind of PAT growth and good margins is likely to be reported by them. ROEs are excellent. The company is debt free, so balance sheet there is no problem. And I think now the time has come when the pharma stocks should start doing well. So it's a safer play compared to other plays like Sun Pharma or Aurobindo Pharma or Lupin. So there I think it merits attention even now. I am expecting around 20% kind of up move on the stock price based on FY19's earnings estimate. The other stock of which I have already spoken on your channel a number of times is a BEL. So Bharat Electronics now seems to be out of its corrective mode. It's started moving up. Fundamentally, again, a debt-free company, 20 plus kind of an ROE, 20-25% CAGR for the next 2 years earnings I am expecting from it. And valuation-wise, from FY20 earnings perspective, 145, 150 looks to be the price target for BEL. So one should be buying into the stock, and it's pretty attractive defense play out there. So these are the two, stocks which looks pretty attractive to me.
Okay, Dharmesh, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Really appreciate your time today.
Thank you so much.
Some final thoughts and closing comments on some stocks which have done well. While we've been talking about what's been happening to the banks, Bharti Airtel has had a decent move in today's session too. And I think it started off slightly lower and then has trading at the highest point of the day, 6.5% here. Hemen, 387 on Bharti.
Oh, frankly speaking, it's looking good, Neeraj. It's woken up after a long time. 344 to 387, that's very sharp. 380 is important. I have a feeling we'd walk into a wall of resistance at 390. But above that, we could give another 7% on the upside. So, despite whatever has happened in Bharti, I think about 390, it is a risk worth taking.
Okay. Is there a risk of the markets just pulling back a bit because global markets are not all that strong and this frenzy in banks may not necessarily last, or do you believe it could?
We spoke earlier also, Neeraj. I think there's a small hiccup. I'm not saying there's a bit too much, but
no. So my question is, therefore, would you be preferring taking home some profits after this phenomenal rally in the Nifty Bank the last few days, or would you continue with your longs tomorrow?
I'd take profits home. Though the Bank Nifty looking better than the Nifty, but I'd take profits home.
Okay, that's the view coming in on Nifty, Bank Nifty. Pull up Tech Mahindra. Remember, the earnings are slated to come out today, and just ahead of that, the stocks now almost at day's high level, 2% higher for Tech Mahindra. Sumeet, on the charts, I know there could be a bit of volatility ahead of the numbers, which will be coming out in a while, but 2% in terms of the moves, and what are the levels suggesting on the charts for Tech Mahindra?
See, Tech Mahindra is a good stock. It has given a good move after a correction. Now again, it seems that from here on we can see a good upside move. Immediately there is some resistance at around 660, 665 levels. Once the stock is able to break the levels of 660, 665 on higher side, then there is a possibility that we might see a move till 690 or 700 levels. I think those who have taken long positions in last 2 or 3 days, they can hold on the existing long positions. And if anyone wants to initiate a fresh long positions, then once the stock is able to break resistance on higher side, then one can go ahead and initiate the long positions for the upside target of 690 and 700 levels in the next couple of days.
Okay, that's Tech Mahindra. Hemen, very quickly, would you suggest somebody to short the 11,500 call option of Nifty?
Yes, with the premium as a stop loss.
With premium as a stop loss?
You add the premium to the 11,500
right.
and then as a stop loss.
Okay, so one can look to go ahead and short the 11,500 strike. There was a query coming in from Tushar Tiwari on YouTube. Just about 2 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. Neeraj, new week, and clearly today the Indian markets have outperformed the globe.
Yeah, and it does raise a point about whether or not this will last, because which was my question to Hemen as well. But hey, when the party is going on, you can stand close to the door but don't exit the room. And that's what I think people have done, because the Nifty Bank has done really well for itself, 0.75%. Singularly, the Nifty Bank helping. You could argue that Reliance, Bharti, etc. have participated, but you got to give due credit to the Nifty Bank today. This is where the gains have come from. The mid caps and the small caps in particular did reasonably well. This doesn't quite qualify for a market breadth of 2:1, but hey, we still have that. So maybe the small cap buying has been fairly strong in the session today. But let me talk about the large cap names. Navneet, of course, will talk about what's happening at the broader end of the spectrum. And the large caps, there are gains to Bharti Airtel. Suddenly, it's risen from the slumber, as Hemen put it, 5.5% higher. ICICI Bank, the start of the trading day today, I would reckon. Actually, even add SBI to that. Some fabulous moves for both of these stocks today. Axis Bank, about 3 percentage points higher ahead of the numbers. Good going there. There is strength in Reliance Industries in response to what was arguably a really good quarter. What didn't do well? IT. So HCL Tech, Infosys didn't have a great day. HDFC Twins didn't have a great day. Bajaj Finance is seeing some gravity as well. There was a short call given day before yesterday by one of our experts, and Larsen & Toubro continues to grind lower. Bajaj Auto, of course, continues to feel weak. But the broader end of the spectrum, Navneet, maybe not so much for the big caps, but the small caps certainly doing very well.
That's right, Neeraj. In fact, there were a lot of gainers that one got to see, maybe on back of numbers. So let's start off with one of them, Schneider Electric, which came out with the earnings on Friday post-market hours. A good move seen for this one. In fact, the stock locked in upper circuit with gains of 20%. During the quarter, the company also turned profitable. Texmaco Rail was also up and about in today's trading session. It moved just in the last half an hour of trade, 13% higher for this one. And GIC RE, on back of good set of numbers, profits were up nearly 100% at 770 crores. Gross premium income for the quarter was up nearly 9%. And Gati, remember the logistics stocks which went up on Friday in the last hour. Today, some clarification coming in on back of Economic Times report that TVS Logistics is looking to acquire promoter stake of 23% in the company. In a release to the exchanges, Gati has confirmed that they're looking out for opportunities, but they have not signed any definitive agreement. 9% higher there. Hindustan Aeronautics, that went up in last half an hour of trade too. So that's closing around the day's high level with gains of nearly 13.5%. On back of numbers, Bank of Baroda, not only Bank of Baroda, trust me, all the banking counters were up and about, but on back of numbers, Bank of Baroda rose almost 10%. The numbers were better than estimates. Good NI growth of nearly 28% and also stable loan growth was seen of about 9% for this one. BEML, good price action, good open interest action too. So on the futures and options side, fresh long positions were seen for BEML. Stride Shasun from the pharma pack went up in trade, so 9% higher for this one. On the losing side, I've got very few losers for a change today. Dalmia Bharat was down. In fact, that was one of the top F&O losers also for the day, so down 3% in trade. Jubilant Life did not have a great session in today's trading day, 4% lower, closing at day's low. And also lastly, Max Financial. I remember this stock was up on Friday, so some bit of profit booking seen in today's trade for Max Financial, which is closing with cuts of nearly 3% as of now.
Well, so that sums it up. A day well spent for the Indian bourses at least. Let's bring up the market breadth. It has done well despite the mid caps being very flat. Maybe the small cap strength out there, but I was surprised really. But still, we have about a 2:1 in favor of the advances, which is great news. But I'm interested in the turnover, to be honest, and just seeing if the cash market turnover stays higher. We have a new norm, 33,000.
33, yep. I think we've been above the mark of 30 in the last 2 to 3 sessions. So that's good news. In fact, if the markets are inching higher on back of good participation, that's always a positive sign. And considering today is just day 2 of the new series, so I think it's just about average turnover that one is seen from the F&O side too.
Yeah, that too. And the contributors list would have Reliance on one side for sure, ICICI Bank. Yeah, no surprises out there, Navneet. But for the fact that the HDFC twins ahead of what will arguably be a big day tomorrow, if indeed the QIP comes about as per what we learn from sources, would be an interesting day.
Yep, and HDFC's been in focus for a while now. For a change, it's on that side of the screen, Neeraj, but I'm just presuming this is profit booking because every time these stocks fall, there's some buying which emerges at lower level.
Yeah, it'd be interesting to see if that happens today or no. But yeah, the volumes on some of the mid caps today and small caps today have been astounding. We'll talk about this tomorrow as well. But final thoughts from our experts. Sumeet Bagadia, we were talking to Hemen about this. Would you rather have taken some money off the table on a Nifty or a Nifty Bank trade? Or are you confident that this move will last until the better part of tomorrow's trade?
Well, we are confident for the upside move. We are expecting Nifty to move up till 11,500 levels. Immediately, 11,400 can be resistance, and overall, we are expecting it to move up till 11,500 levels. I think those who have taken long positions in Nifty, they should hold on the existing long positions. If there is a dip of around 30 to 40 points from present levels in Nifty, then that should be used as a buying opportunity. Higher side, 11,400 can be the immediate targets. Once 11,400 is taken away, we can see move till 11,500 levels. So overall, Nifty and Bank Nifty, both are looking good to me.
Okay, both at higher levels, fresh record closing also coming in for both Nifty, Bank Nifty, and also not to forget Sensex, which closed with gains of nearly 150 points. Hemen, what about you? What should the approach be now towards these indices? You've already highlighted Bank Nifty is looking better, but if one were to take a fresh trade, what should it be?
There's been a gap Navneet, on the daily chart as far as the Nifty is concerned, and I'd wait for the Nifty either to come close to the gap or the gap to get covered before I were to go long. Currently, there aren't any signals to go short, but there's if it breaks 11,295 on the spot tomorrow, I'd go short. And if I were to anticipate trouble, we spoke earlier, Navneet, 11,500 maximum OI over there. Sell that and use and add the premium to it and keep that as a stop loss.
Okay, that's the technical view coming in. On that note, let's thank Hemen as well as Sumeet for joining us today and taking us through their technical views on the markets and also on a couple of the individual stocks. Well, with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj and my side. Thanks a lot for watching the show, but don't go anywhere. Lots more lined up on Bloomberg Print.